Good evening and welcome to my midweek recap here for the S&P 500 and plan ahead for the remainder of the week. Only change to positions as far as YouTube is concerned. I've started scaling out of these June 325 calls at 159. Simply the reason being is I'm up over 100% on these calls. I have plenty to spare. I'm going to go ahead and lock some in on the way up here. Now with that in mind, on to my trade plan. As you can see, there's a couple of notes on here from the past few trading days. Um, Nice flag, continuation move higher, chop around for a day or two. Today, another push up higher, another leg up, consolidation into a flag. These are momentum patterns, momentum plays, and I will take these trades as such. I will continue to push these for new all-time highs again and again until something outside of the markets or something in the markets tells me that it's not working anymore. So with that in mind, I will be looking for 292 calls above today's high with a stop loss just below this pennant. Ideally, price action will open up below here, dip down, sucker in some bears, and then rally hard up through highs, taking out their stops and triggering another buy setup for the bulls. Measure move is up here to around 293.20, which is where I'll start scaling out of those. I will continue to scale out of some of those 325s as I feel the need to, just to lock some more profits in. If price action opens up lower and starts to push down, which is completely possible, it likes to put in, the S&P anyways, likes to put in these somewhat of a fake head and shoulders type of pattern. Yesterday, last 2 days did it. It's done it numerous times over and over again. It's probably what tricks a lot of the bears into positions, causing these short squeezes. Anyways, that's another story. Anyways, dip down here to the 8 EMA, which will probably be up here around 289 tomorrow on the open. I'll look for 290 calls about 2 weeks in the future. Down here, I'll be looking for the 287 calls at the 21 EMA. At the 50 SMA, I'll look at 282 calls about 4 weeks in the future. And down here, the 200 SMA, I'll look at 275 calls about 4 weeks in the future. So plenty of supports down below price action. If the continuation patterns start to fail, plenty of supports to buy. Now onto my daily chart over here. Just want to touch on quick subject. A lot of participants and traders and analysts, chartists, whatever you want to call them, are saying, you know, when the SP makes a new all-time high, it pulls back. Okay. Sometimes it does, sometimes it doesn't. This going back just last year, just at a glance, I don't want to zoom out too far, but as we start putting in new highs, sure we get a pullback. New highs, sure we get a pullback. New highs, would you call that a pullback? Possibly, maybe. Being down 1%, 1.5% is potential pullback. Another rip, up another $6, and finally getting into some consolidation. Even then, doesn't necessarily pull back. So before you put all your eggs in one basket and you start to short because it's due for a pullback, depending on where you get in, it may not pull back anywhere close to where you got in. And onto the overall chart pattern here for the S&P 500 on the daily. There's a huge full year of consolidation. Well, not quite a full year, 9 months almost. We've dipped down, found support, rallied, put in a very bullish reversal pattern in an uptrend. At least tells me that I have no problem hitting this profit target, which is another reason I started scaling out of those 325s. Came close to my target, start scaling out, no problem. This here's the monthly time frame. A very bullish candle. Really no reason to be bearish on something, something looks like this. It doesn't matter what name you're looking at. Anything that looks like this is not bearish in any way, shape, or form. As I said in my last video, I'm still looking for 330 to 340-ish measure move from down here in this consolidation range. This, if I was to flip the chart upside down, it'd be a big H, which is a very powerful momentum pattern for sellers. Exactly the opposite on the upside. You have come up into a resistance, dip down hard, put in support, and it starts to roll over. And if you flip an H upside down, it's exactly what it looks like. Zooming in here a little bit on the weekly time frame. Nice gap up. Doesn't necessarily have to fill. There's a lot of people that will argue it does need to fill. What about this one down here? There's plenty of them. If you zoom back through on a weekly time frame, plenty of gaps haven't filled. So I'm not saying it's impossible for it to not be filled. I'm just saying it's possible for it not to be filled. So moving forward here onto the daily time frame, this could potentially be a blow-off type of pattern. If that occurs, we'll just simply get another move like we did in February. Sell off hard to a support, rally hard, sell off hard to a support, and rally hard again. So Market's still doing good. It's designed, the S&P 500 is designed to go up. This is why participants and investors still put money into it. It's designed to go up. If it didn't do it, it wouldn't be doing its job. It wouldn't be performing properly, and there'd be no point in investing in it. So just think about that before you turn too bearish on the overall market. These are my trade plans and my thoughts for what's going on with the S&P 500 and what I'm looking for the future. If you have any questions or comments, please feel free to leave them down below. And as always, you're welcome to come join us at the Trade Crew chat room. It's a free chat, and check out some of these trades live. Have a good evening and good luck.